markets, the Treasury Bills secondary market continued the bearish run with few trades seen this week owing to tight liquidity. Well, traders at Axis Bank say they expect the market to close the week at this rate. Constance Onyia, fixed income dealer at Axis Bank, joins me for a weekly wrap of activities at Nigeria's fixed income and FX markets. Constance, thank you so much. It's a pleasure to have you on the show. Let's get right to it. Share with us the market review for this week, what you've seen in terms of trading, in terms of investor sentiment, and of course the outcome of the PMA yesterday.
Thank you for having me, Esther. Thank you. It's been a stress week. So far, we started the week with the entry auction on Wednesday, where the CBN, the DMO, sold a total of 143 billion across the 91, 182, and 364 days. It's quite to note that the rate actually went up this time, seeing that the illiquidity system still persists. So we saw the 1 year, which formally closed at 6.07, closing at 7% at the Wednesday auction. It wasn't overly subscribed, as we just had like 145 billion on the subscription side, but the DMO went ahead to sell only 143 billion. So on the OMO side, we've seen OMO rates also going up, and this is as a result of the illiquidity that we have also seen in the system. Rates on the long tenured OMO bills are trading at about 8% right now, coming from 7% where they traded the previous week. So for the interbank market, we've seen that OPR and overnight rates.
Constance, I do beg your pardon. I'm just going to have to ask you to hold that thought while we quickly fix some of the audio issues that we're having at this time. Thank you so much for your patience. Constance Onyia, fixed income dealer at Axis Bank. In the meantime, let's see how other West African markets are faring at this time. Constance Onyia, fixed income dealer at Axis Bank, is back with us. Constance, thank you for your patience. Let's pick up from where we left off, talking about how illiquid the market remains and, of course, driving prices up.
Okay, so I was saying that the auction, let me just recap, just in case you didn't hear me. So I was saying that at the auction, the DMO sold a total of 143 billion across the 91, 182, and 364 days. And then we saw stop rates inching up from the 91, 182 all the way to 364 days. The last auction stop rate for the 364 days was 6.07 to close at 7% on Wednesday. So the illiquidity in the system has also persisted going into today. So for the week, as we're seeing it going into a close, we expect that the system will remain bearish. So the OMO bills, as I mentioned before, traded at 7% last week. Coming into this week, I've seen them at 8% and 8.5 levels. We also expect that the interbank, the overnight rates and the OPR rates close at 13.88 and 14% respectively. We expect that only a few maturity coming in next week, and that's just about 10 billion, which will probably not improve the liquidity system. OBB and OPR and overnight rates are still hovering around 13.8 and 14%. We have bond auction coming in on Monday, where the DMO is also set to sell across the 3-year, the 10-year, and the 20-year bond, respectively, as they are going to be offering about 70 to 80 billion across each maturity. To wrap up this week, we have seen that the Treasury Bills markets are still on the bearish side, and then we expect this opening next week as well. We expect the auction on the bond to be slightly higher than where it closed previously. The 2042 bond, we saw it close at 13.15. We're expecting that this rate might get to around 13.5.